What does changes in inventory conveys in financial statements? This is one area many will actually get confused. To understand that, let's take a real profit and loss. So here you can see there are income, there are expenses. So everyone will understand these two, income and expenses, but they get puzzled when they look at this one particular item called changes in inventory. So here it is changes in inventory of finished goods, stock in trade and work in progress, but they get puzzled. What does this positive number mean? What does this negative number mean? Let's try to break that. So I checked this schedule 26 and I got this breakup. This changes in inventory is a result of the difference between the opening and closing stock. If you see, the opening stock is 25,803 in 22-23. The closing stock is 21,782. It means the stock level has come down. It has decreased. Whereas in 23-24, the opening stock is 21,782. The closing stock has increased a lot. It has increased a lot by 74,710. This is an increase. Okay, but the question is why this is written as a positive item? Why this is written as a negative item? Here, the opening inventory got reduced by 4,020. So this reduction actually means those inventories have been either consumed or sold in this year. It means there is a corresponding income booked for that. Yes, the income includes the sale of those reduced items. So if we are booking income, then we should book corresponding expense. So that's the reason this reduction is booked as an expense in the current year. See, under expenses, in the previous year, this is appearing as a positive item and all these are positive items. So this 4,020 is also included as expense. Then what does the negative figure in 23-24 means? If you see, the stock position has increased, right? Because opening was 21,782, the closing is 96,490. It has increased by 74,710. So the movement is from this figure to this, meaning the overall increase is 74,710. It means there were additional production that was either not consumed or not sold in this year. It means, look at here, this is the total cost incurred during the year. Total expenses incurred during the year is 8,40,220. But of this, what is remaining still in progress or unsold is 74,710. That is whatever we have calculated here. It means this is already included here, but it should not be considered as part of expense because it is not yet sold in the current year. It will be sold only in the next year or it will be consumed in the next year. So it makes sense to reduce this from this. So that's the reason this is shown within brackets. Why? Because this is not an expense. It got included in this 8,40,220, but since it is not yet consumed, not yet sold, it will be consumed only in future or sold only in future. They are not the current period expense. So we have to remove them from the expenses. Why we are removing from the expenses? Because they are already collectively included in these two circled items. So how can I remove it? Put it as a separate line item. And that's what you see here. Under expenses, you are putting a negative item. It means you are reducing the expense. Okay. A positive item means you are adding the expense. A negative item means you are reducing the expense. The positive item means that there is a corresponding sale. So income and expenses are matched. And negative item means there is no corresponding income. So I'm removing from these items where this 74,710 is included. So that's the reason we add the positive change, we deduct the negative change. Do you wish to learn more? Then I invite you to check our Credit and Financial Analysis Mastery course. It's a comprehensive course with 70+ hours of video lectures related to credit and financial analysis, which also comes with 15+ ebooks and multiple supplementary reading materials, and you also have Q&A support facilities. To know more about the course, just come and see FA. I'll share the details with special discount.